Hey, welcome back to Harvesting Income. Today we are going to look at another interesting ETF, which is known as the iShares Russel 2000 BuyWrite ETF, IWMW. Uh, this is another boarding ETF, but this is going to be very interesting because I did a previous video on a boarding ETF named IVVW. This was the IVVW boarding low cost high yield ETF that can deliver, and this got higher number of views, and a lot of people probably liked it, and you can see from the number of views because there are very few videos where I've got 20 plus views because I'm a pretty new channel. And let's first understand the fund, and then I will give you my own observations and also my own experience since I invested in this fund. And this is not investment advice, so do your own due diligence before making any decisions. So let's look at the fund. This is the iShares Russell 2000 Buy Right Exchange Traded Fund. This fund basically invests in an index that is the Russell 2000, and they sell 1 month call option to generate income. And so that's the summary that they have given here: targeted enhanced income and diversification, and it's easy access to the Russell 2000 index, which covers the small and mid cap and 2000 large companies. It's a mix of large, small, and mid cap, so it's a little tricky. And it's a volatile index as well, so there is a chance for more option premiums and volatility, which is positive. At the same time, it's also volatile and highly unpredictable. So let's see what are the other features of this fund. Okay, this fund was launched in March 2024, so it's like probably 8 9 months old. Like, it doesn't have a 1 year track record so far, so it's too early to conclude anything. Like, we had to wait for at least 1 year. And the fund has net assets of about 21 million. That is pretty good. And they have a benchmark, which is the CBOE Russell IWM 2% out the money by right index. Okay, it's a mouthful. Basically, they are writing in calls on the index at 2% above the market, basically 2% out of money from the current index level. And basically, they hold the Russell 2000 stocks, which are basically mid cap or small cap stocks primarily, and they write call options on these stocks. The good news is they are writing out of money calls, which is 2% above the current market level every month. It's like every month the calls are written. So it's more like a plain vanilla automated, call writing every month. And that ensures that some upside is captured every month, and that leads to regular dividend income. The premium income is distributed in the form of dividend, and also there is a little bit of upside that is being captured. Now let's look at what is the fee for the fund and other information. Let me see if I can find that here. The fees for the fund fee is about 0.39%, including management fee, acquired fund expenses, and so on. Not that expensive. It's still decent. IVVW was 0.25, but this is 0.39. Slightly expensive, but still makes sense. And they invest in the IWM, that is a main holding, which is their own version of the Russell 2000 ETF, and they write call options on the same index to generate the premium income. Okay, now let us look at the my own analysis of my investment, and then I will talk about the fund's performance, and we will also look at a lot of interesting stuff. What can happen with this fund, or what may not happen? Like, it's just a kind of a curiosity. It's not any kind of advice. Let me first quickly show you my own investment in this fund. So uh, I bought this fund at a average cost of about $46. You can see that here. And the total dividends I received from the fund is 86.55, and current price is about 44. Like, we are shooting this as of December 27th. And these are the basic information that I have about 24 units. And when I do my all math, like, I get a price return of minus 4.4%, basically losing 4% on the fund. And at the same time, I'm also making dividends of 7.8%. So because I made some dividends in the last few months, and Overall, it's about 3.4% net net. However, just make keep in mind that these calculations are not accurate because I bought a few units, over a period of time. So these numbers are not accurate. But I'm just showing you what is happening, just to show you my own performance or analysis. So this is assuming that everything is counted at one point, and the 3.4% is the net return I'm getting on this investment. Is it good or bad? First of all, this is not accurate. This is just to see how the experience has been so far, because I initiated fund purchases from June, and every month, whenever I get a chance, I add up a few more units, and I have 24 units in total. Overall, I would say this has been good because this is hardly 6 months period, and in that period, I've made a 3.4% return, which is decent. Like, it's not neither good nor bad, but it's decent. Let's look at the overall performance of the fund itself. Like, since it has been launched, this fund was launched in March 2024. So when I move to the right, I can look at the fund performance. So here I can see my fund performance. The fund I was it started in March 2024, and the price was 49. Now it's 44.09. So technically the fund is losing 10%. However, they made dividends of 7.8, and so dividend return is 15.9%. So overall net net they're making 5.5% total returns, which is positive because this fund is hardly 9 months old, and this is a good starting performance for this fund. And bear in mind that this is a relatively new fund, and it's also a covered call fund, which is actually underperforming the market. I'll show you the overall index performance as well. If I go further right, I have the index benchmark here. I've taken the iShares index ETF performance to replicate the index. So basically, the IWM is the iShares Russel 2000 index ETF. And when you look at the price, current price, and the price um, as of the inception of the fund, it's about a 10% return, whereas dividends hardly were 1.3%. So total returns were 11.3%. And when I look at the covered call ETF IWMW, it's giving roughly half of the total indexes returns. Like, it's basically giving a lot of upside, and it's delivering 5.5%, which is not good actually, according to my observation, because recently we had a very good market bull run, and considering the recent performance of the index, this is not good. However, it's too early to draw any conclusions. It's a new fund, and we are also looking at a very short time period, so it's too early to judge this fund as such. So I would say let's give it some time and look at the performance, you know over a period of time, and how it does. But there is a good news that this fund may do well in the future if markets go down or flat, because when you go back to the details of the fund, I'll just explain that. Okay, I go back to the introduction part. So basically, here what the fund is doing is basically they are writing 2% out of the money calls, which means at every month when they write the calls, they're going to write calls 2% above the index level at that point of time whenever they write the calls. So which means they are going to capture a little bit of upside every month, and which means that your income may not be that high in the future, and the capital appreciation could be more stable or more moderate to high. This is my own assumption or my own analysis. I could be completely wrong here, and this is not a recommendation. As you know, I don't recommend any prices or any other investments. However, looking at the data and looking at my own experience, it appears this fund will provide decent returns overall, not just in terms of the dividend, but also in terms of the capital appreciation. However, if the Russell 2000 doesn't perform well, like if the index is going to fall, or if things don't go well with the index, the price returns are going to be very low or probably negative. However, the dividends are going to be pretty attractive, and that would present an opportunity for me personally to buy more of this ETF at a lower price. Am I saying that you should invest more or buy more on the dips or anything like that? No, not at all. It's completely your option. And since this is a risky index because it's more of small and mid cap companies, you would find a high level of volatility. So before you invest in this, I would say do your own research. And for some of you who are actually on the fence or waiting, I would say you can wait up to the point in March or April next year, like 2025. And when it completes 1 year, you can get a holistic view of the performance. And at that point, you can make a call whether you want to consider this or not. Of course, apart from this, we have other funds also in the Russell 2000 space, and you can consider them as well. And thanks for watching up to this point. If you like this video, please feel free to like or subscribe. And also, if you have any questions or any feedback, please feel to drop your comments below. I look forward to hearing from you. Thanks a lot. Have a great day.